Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Peter Vassallo, Portfolio Manager of Foreign Exchange at BNP Paribas Asset Management, to discuss potential movement for currencies in 2024 as policy cycles ease. Peter, it's great to have you with us. Welcome to Trade Talks. And before we get into next year's outlook, many currencies were pretty directionalist this year in 2023. What do you think that was attributed to?
Hi, Jill. Yeah, so it's actually been very surprising because vol in the rate space was so high, whereas in currencies, the DXY is pretty much ending the year exactly where we started. So I think a big part of that is that the global forces that have been pushing central bank decisions have been the same everywhere. You know, we kind of saw some additional resilience in the US versus Europe, but all told, it's really been a story of stubborn core inflation everywhere and pretty resilient economies. And that's kind of driven all economies in the same direction. So we haven't really seen the divergence we had last year where the dollar was really outperforming. That kind of left currencies in a sort of directionless spot, really.
And moving into 2024, you think that could completely change. What is the catalyst for that? And what do you expect to happen in the foreign currency space?
Well, I think especially as we get to towards the second half of the year, when we start to really get into the easing part of the cycle, different economies have different rate sensitivities, especially, looking at the US, for instance, we have the 30-year mortgage system versus countries like any countries in the EU, really, which have a much shorter time horizon on their rates. They're a lot more sensitive to rate cuts. So we're probably going to be seeing some divergence in the policy cycle there, where the Fed might have to hold rates higher for longer versus what the ECB and the Bank of England will do, should be much more reactive to slowdowns. And that's going to prompt divergence in policy, and it's going to prompt much bigger currency moves. At the same time, towards the end of the year, we're obviously going to have the political cycle in the US really cranking up. So that's going to add a lot more volatility into the space as well.
Do you think any of this thesis is already priced into different currencies?
Well, not really. The vol market's just been crushed because performance hasn't been there, and a lot of speculators have just moved away from currencies because there's not been that much happening. So it's really the fixed income space just been a lot more interest. I think people are kind of sleeping on this a little bit, just because it hasn't been the sort of the focus of the market in the way it was last year when the dollar was really attracting a lot of people. The real strategies which have been working out this year have been carry type strategies, and that's probably run its course unless we really see absolutely no landing whatsoever.
And you had mentioned that we're going through the national election cycle in the US the second half of 2024. Do you expect the US dollar to see the most volatility as a result of that? How have elections generally impacted the currency space?
Yes, it really depends on sort of the policy and how the market thinks that that's actually going to be enacted, and also, of course, whether we're going to see a single party winning control, or if we're going to go back to the sort of split government where nothing happens. I think with the prevalence of fiscal worries, it does matter more than it would in other cycles. If there's a chance that none of the fiscal issues in the US get addressed, that's going to lead to more treasury volatility, which will in turn lead to more volatility in the dollar. You could especially see some big moves in crosses like dollar yen and dollar Swiss. If the US starts to get the US dollar starts to get supplanted as a haven, and investors move towards other alternative currencies as a safe haven, which yen and Swiss franc are primed to be. So yeah, if the outlook for the US is that fiscal policy doesn't get addressed, then it's quite likely to see a lot of volatility in the US dollar, especially against other safe haven pairs.
All right, Peter, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks for having me.